Good day. My name is Malan. I'm the Investment Director of Regarding Capital Management. I'd like to talk to you today about the bond market. It's a part of balanced fund management. For those of you that are perhaps not that familiar with the bond market, basically you have a yield of a bond. That's pretty much the return that you're going to make through holding that bond to maturity. And generally speaking, when yields go down, the price of bonds go up, and that's how you can make money out of the bond market. We are buy and hold investors in bonds, and basically what you see is what you get in the bond market. So it means if you buy a bond, a 10-year bond today at a 6 or 7% yield to maturity, you're going to earn 6 or 7% on that bond if you own it for the next 10 years. Generally speaking, we have calculated that in 2005 and in 2009, the bond market, the 10-year bond, was basically priced to deliver you a 2% real return if you held that bond to maturity. So a real return is after inflation, and we do not think that those real implied returns of 2% is enough to compensate you for the risk of owning government bonds for 10 years. What then happened from 2005 and in 2009 was that basically you lost money if you had invested in bonds at that point in time. Our calculations show that today, due to yields in the bond market moving even further down, bonds today, 10-year government bonds today, are priced to deliver negative real returns if held to maturity. This is a very rare situation that's developed in the South African market, and it is causing all sorts of strange behaviors by investors, and we do not think that it is a good idea to own long-dated government bonds at the moment. In fact, I think this is one of the worst investment ideas that I can think of at the moment for investors. As a result, our client funds do not own any government long-dated bonds. We do own a small position in senior credits of African Bank. We bought those at a real return of between 4.5% and 5.5% to maturity. The maturities are coming up in the next couple of years, and we do think that that represents good value for bond investors. So in conclusion, we do not see good ideas in the bond markets in South Africa or globally. Thank you very much.